So what did you make of that? Like, how does this wind up playing out regardless of what happens with China trade?
Well, look, I think the agricultural sector in the U.S. is gotten very hit because at the end of the day, soybeans in particular are a game of three. It's Brazil, U.S. on the production side for the most part, and then China on the consumption side. So obviously, if China retaliates, it's trying to hit where it hurts and trying to apply pressure to U.S. negotiators. But ultimately, the U.S. has another angle here, which is that the U.S. is becoming the world's largest energy exporter. And that's a bit more complicated of a game. And I think we saw the U.S. becoming an energy independent fourth quarter of last year. I think I brought that up here, and President Trump brought it up in the State of the Union address, right? So that seems to be giving Washington, D.C. a different layer of sway over many trading partners, and unfortunately, I think that's to the detriment of farmers, but it will be to I think we'll end up bringing a lot of money into the energy space.
So to that point, what's your base case then for how deals wind up working out?
For the remainder of 2019?
Well, between China and the U.S. in general. I mean, they seem positive, but there's still a structural issue.
There seems to be an approach that's more, we're the big boy, we're going to carry a big stick, and we're going to try to get others to follow. And I think that's a little bit challenging. People don't forget, your trading partners don't forget when you're treated a certain way. So my hope is that they reach a negotiation before then. It seems to be that there's some indications in Washington that the U.S. and China will sort things out before March. I'd expect a little bit of relief in markets, particularly for the big multinationals, the materials, the industrials companies that have been most suffering around all this. But I think the reality is the volatility driven by politics affects capital investment decisions. And that's a long tail. It's not instantly after everything's solved on March 2, for example, there'll be a big CapEx wave. That's just not going to happen. It's much more likely that there'll be an approach that reflects this political reality that volatility has brought to a CFO's decision making. And that's lower is the bottom line.
Francisco, if our position in oil, the U.S. position in oil, has given it somewhat more bargaining power with respect to China, does it also potentially offer a solution? For example, liquid natural gas. Natural gas is something China needs, something we could supply. That could help the balance of trade deficit.
Absolutely, and I think this is one of the key issues here is that energy independence also means more energy interdependence. So we are going to get a lot more tied up, whether it's through LNG or ethane or gasoline or diesel or crude oil. There's just a lot more trade going on as the U.S. exports its surpluses, but continues to import other energy-related commodities. So I think that what doesn't have to be missed here in the picture is that we are becoming more interlinked, not less interlinked, and I think we'll see it over the next few years. Right? We got to find outlets to keep moving all these goods that we're producing.
One thing that helps is the excess of supply and energy really helps the U.S. consumer. We keep gasoline prices low. That keeps a lot of consumption dollars in the system, and that's a pretty good thing for the U.S. economy.
More interlinked, Francisco says, but there's an upside and a downside to that. The President of the United States seemed to be saying, let's pull off of the globalization a little bit. Is this just a temporary blip along the way? Is this inevitable that we're going to become more and more globalized, or could it turn around?
Stated policy is America first, I think, is what's come out there. The reality, though, is that the corporate sector has looked at ways to manage cost, profitability that have all made great progress in the last 20 years. We've gotten to very, very tightly linked systems. And the more you do things like Francisco indicated, where the U.S. could be dominant, the more that we're going to want to share that production globally. So it does make sense. And the corporate sector may be the way forward. I think the real question is, what is the policy going to be?